This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 21st, 2012. Our time is 8:36 Mountain. Breaking news as we start today's program. We are going to be back on in Toronto on a brand new station starting January the 5th. The World Financial Report going to be on News Talk 1010 Saturday night at 6 p.m. in Toronto. For those that listen to us on another station in Toronto, good news, we're back on in Toronto on CFRB, a legendary radio station, News Talk 1010 in the new year, January the 5th, on Saturday at 6 p.m. And of course, we'll continue to be on QR77 in Calgary, 630 CHED in Edmonton. You can listen online on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have our podcast on demand. You can listen to us anytime you want with the podcast through iTunes. Just go to iTunes and type in World Financial Report on Radio. You can take us anywhere on your iPad, your iPod, any portable device. This radio show goes with you. But we're very excited to announce that we will be back on in Toronto in the new year. Since we have spoken to you last Friday, obviously we had that horrible shooting in Newtown, Connecticut. Thoughts and prayers to all the people there. Obviously, people were saying today was the day the world was end, and they didn't take into account time zones because we knew very early on in the day and down under the world did not end, so we knew we were all right. Also, the fiscal cliff not being solved by the politicians in the United States, no surprise there. They're just completely brain dead. A lot of volatility in the markets. People saying metals going down because of hedge funds or a good GDP number or manipulation, which I think is somewhat the case. Governments don't want hard assets to do well in the times that we're in because, let's face it, they're debasing paper money, fiat currencies, and people are moving into hard assets. That's something they do not want. But the volatility, Harold, that we're seeing, it can be your friend. If you have a long-term view of this market and you know what the end game ultimately will be, price dips are an opportunity to buy hard assets on the cheap.
Exactly right. We do want to wish everybody, by the way, a very, very happy holidays coming up. We will be doing our radio shows every weekend, so we will not be taking a break over the holiday season, but we do wish everybody a wonderful holiday and hope everybody has a great time with their family. I would say that this week was an extremely frustrating week in the market. You know, I read a lot of reports, and I'm really getting a lot of frustrating feelings, even from a lot of the analysts that write their own articles. So, you know, the market in gold and silver at this particular point should be moving higher. In actual fact, this is a seasonal time when gold and silver primarily do move higher the second week of November throughout December, January, and February. So obviously we haven't seen that this year at this particular point, and there's reasons for it. Obviously, this fiscal cliff situation is a major concern, and it's wreaking havoc on the markets. But, you know, the markets, I guess the best word to describe them this week was frustrating. We had 2 days out of the week where gold dropped $20. It came back. Today, as we're taping the show, the gold market did open up lower and now is trading $10 higher. Silver's up 50 cents on the day. The thing about the gold and silver market this week, it did not break any technical support levels. So the fact is that what gold and silver is doing at this particular point is trading within its range. The range for silver is $26 on the low end, and obviously the high that we saw last year, which was $50 on the high end. The low end for gold is right around $15.20, and the high end is obviously $1,900. But the important number for gold is we want to see gold break above $1,800. Why is the gold market and silver market dropping off at this point? Again, very confusing because the U.S. dollar was very weak this week. In actual fact, just a couple of weeks ago, the U.S. dollar was actually trading at around 81 cents, and now the U.S. dollar is trading below 80 cents at around 79 and change. So what we should have seen this week was gold prices and silver prices moving substantially higher based on the fact that the U.S. dollar was dropping. However, due to the reasons that Randy gave you at the beginning of the show, and there seems to be many of them, the gold market is not responding the way that we anticipated it would going into the latter part of the year. Now, that in no way, shape, or form changes our outlook on the market, because the reason that we're bullish on precious metals, mainly gold and silver, is primarily due to the U.S. dollar. And there is no doubt that the U.S. dollar is a doomed currency. And the reason that we say that is that the Federal Reserve has already committed to printing $1 trillion this year, or going into 2013. When you print that amount of money, it weakens the dollar substantially. By weakening the dollar, it'll move gold and silver prices higher, because a weak dollar is extremely inflationary. What it basically means is that when your dollar loses value and you have to buy certain items, it costs you more because your dollar doesn't buy as much. That's inflation in the most simplistic terms. The fact is that it's a very difficult time right now. There's a lot of confusion in the market, and a lot of them is around this fiscal cliff. And at this particular point, it appears that they are nowhere closer to a deal, and a lot of the lawmakers have actually taken a break for the holidays. So they're not even around to work on a deal at this point. So the bottom line is that when the markets opened this morning, the Dow Jones was scheduled to drop 200 points at the opening. That'll give you an indication as to how severe this situation is with the fiscal cliff. Evidently, they're not going to come to a conclusion before the beginning of the year, and if these tax situations do click in, we could see a 20 or 30% drop coming in the Dow. So you would think that it would be a major priority, seeing that they're so concerned about the stock markets and that type of thing, that they would do whatever they have to do to get a deal done. But it doesn't appear at this point here that that's going to happen before the end of the year. So if these tax situations do click in at the end of the year, we're looking at a potential of the stock market dropping possibly 20 to 30%. Now, those are very dangerous situations, because most people have their retirement funds sitting in stocks, and they have an additional, fund where they may trade mutual funds or those type of things. But at this point, the danger in the market is severe. You're seeing it every single day. You see markets like gold and silver that should be moving higher, moving lower. You're hearing a lot of talk about manipulation. The thing about a manipulated market that really bothers me, and I'm sure an awful lot of people, is that these are free markets. They're supposed to be free markets, meaning that they trade based on buyers and sellers. If there's more buyers than sellers in the market, the prices should be going higher. If there's more sellers, the prices should be going lower. At this particular point, the players in the market appear to be these major banks like J.P. Morgan and those type of banks. Evidently, they can trade under different rules than everybody else can. And the fact is that they can short the market. When I say short the market, they buy this market to go down, or they sell this market to go down. And if the market does go down, they profit by that. Now, there's nothing wrong with doing that, because everybody's entitled to their own opinion, and if they think that the market is going to drop, they're certainly entitled to buy put options or short the futures market and try to profit if that does happen. The problem is that the Commodity Futures Trading Commission, which is the federal government, which is the regulators for that type of market, are not doing their job. And the reason I say that is that there are limits to what a speculator can purchase or sell in a particular market. And what's going on at this point is that they appear to be allowing these banks to take such gigantic positions that they're actually moving the market in an adverse situation. And again, I can understand the frustration of the U.S. government at this point. I can understand how hard they're trying to get the economy back on track. But to the point of doing things that are not legal in the market is what ruins the reputation of the market. And this happened earlier in the year, if you remember, when there was a major commodity brokerage firm that absconded with all the funds that were in the segregated funds. And this was a massive firm, and really nothing happened to this company. So what you have going on in the markets at this particular point, again, according to some analysts, is this manipulation and these short positions in the market. But one thing you should know is that eventually these short positions have got to be bought back again. And if there's nothing that we can do with the Commodity Futures Trading Commissioner, or the National Futures Association, or the again the regulators that do regulate these markets, if they're not going to keep these markets working properly, what they're going to find is most speculators will leave those marketplaces. So again, I highly doubt that is going to happen. What we're seeing happening right now is a very thin market. Most traders are gone already. They're gone for the holidays. The trading volume is extremely light, so the moves in the market tend to be exaggerated. And from past experience, we've seen when these banks have come in and shorted the markets in the past, they've done it when the volume in the market has been extremely light. So that's my explanation for what is happening in the markets at this particular point. These markets tend to work under a certain auspices. When the U.S. dollar falls, gold and silver go up. It's a very simple pattern. It's happened that way since the beginning of time. And the fact is that the U.S. dollar should be dropping substantially. It's now dropped below the 80-cent level, what I do believe is going to happen in 2013 because of the massive amount of printing that's coming, that we will see the U.S. dollar start to fall again. And when it starts to break 78.50, then 75 cents, and gets down to the lows that we saw at 72.5 cents, that's when gold will be in the $2,500 to $3,000 range or higher, and that's when silver will probably be trading at around $78 or higher. So I do believe that this is going to happen. At the beginning of the year, we are going to give our predictions as to what we believe is going to happen in 2013. For 13 years now, I've been doing this radio show, and our predictions have been extremely accurate. This year was an upsetting year in the fact that thus far the markets did not do what we anticipated that they would do. Again, all the reasons were there for the market to do that. We should have seen gold break the old high of 1920, and we should have seen gold trade somewhere between 2,000 and 2,200. As we're taping the show this weekend, the price of gold is trading at around 1,650. Now, all in all, what we have seen, again, is tremendous volatility in these markets. However, the high that we've seen in gold is 1,900. It's at 1,650 now. It's not like this market is falling apart and is finished. It's nowhere near that. In actual fact, all the fundamentals are still in place. In actual fact, I'm still as bullish on gold and silver as we ever have been. All we're seeing at this particular point is confusion in the market over this fiscal cliff situation, and that is definitely going to straighten itself out. In actual fact, 10 days from now, we should know what's going on. Either they're going to come to some type of decision. However, I doubt that that's going to happen. They'll tend to kick the can down the road like they have done with the budget and everything like that, and we're just going to have to deal with it. However, this fiscal cliff scenario is so extreme that it could actually cause stock markets to drop in the United States substantially, that could drop the market down by 20 or 30%. So again, the safe place to have your money is not in the paper asset market. It's not in the stock markets. There's no reason to be in stocks at this particular point, and that's primarily because the U.S. economy is not doing well, and we do not see it doing well going into 2013. So we're going to stick with the same recommendations because, again, they're the only recommendations that make sense. Hard assets during these particular times do extremely well. And, again, even though gold has been to 1,900 and is trading at 1,660 right now, that is not a big drop-off for gold. In fact, gold could very easily move up $100 in a day, and we've seen that happen before, and we've seen silver go up $1 and $2 in a day. So there's no way in the world that I have sold not an ounce of gold or an ounce of silver out of my personal portfolio. I'm still extremely bullish, and I do believe that these markets are going to head substantially higher, and we are going to hit the numbers that we ultimately talked about, which is $4,000 to $5,000 gold or higher, and over $100 to $200 silver. We're still extremely bullish on oil. We believe oil prices next year will be in the hundreds and possibly 150 and possibly even as high as 200 by 2014. So we do still recommend that oil prices are a very good bet, and we do believe that oil is going to go substantially higher. So again, what we're sitting with right now is a frustrating situation because the markets are trading within a range and are not doing what we like it to do. Let's face it, these markets are only a lot of fun to trade when the markets are going our way. So, again, I am not abandoning not an ounce of gold and not an ounce of silver. We're extremely excited about 2013. We think that we have a very firm grasp on what's going on and what's going to happen within the foreseeable near future. Between the gold and silver markets and the exciting situations that are happening in diamonds, most of my clients and listeners are sitting in those markets, and again, I believe we're going to continue to do extremely well. So, again, we're almost at the end of the year. We should be seeing a rally, but at this point, the market's just trading in its range, and we do expect it to break out within the very foreseeable near future.
We will be doing a show next week. We will be taping it on Friday. Keep that in mind. You can listen, obviously, on the radio, online, or at your convenience via iTunes and our free podcast. One thing to keep in mind, both gold and silver are positive on the year. They have made money on the year. The company Harold recommends you use is Worldwide Precious Metals. They're the experts in this very specialized field. Their telephone number, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. We have our radio show to unmuddle the very confusing at times and help guide you with your finances. You work very hard for your money. You want to protect it and make it grow, obviously. As well, we have our free weekly newsletter. It's something you can go through in 5 to 10 minutes on an iPhone, iPad. You can read it at your convenience very quickly, or you can spend hours. It's really up to you. But get our free weekly newsletter from Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website is wwpmc.com. And since 2001, gold and silver have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. And we're seeing that in the United States. We believe 2013 will be very good. The United States is going to be printing, the Fed, $1 trillion in money to prop up the stock market and prop up their economy. You take that money away, everything collapses. It's that simple. That's why we're bullish on hard assets. It's monetary policy. Some of the top quotes from our newsletter this week. Peter Schiff said, "In order to generate phony economic growth and to pay our country's debts in the most dishonest manner possible, the Federal Reserve is 100% committed to the destruction of the dollar. Anyone with the wealth in the U.S. dollar should be concerned that economic leadership is firmly in the hands of irresponsible bureaucrats who are committed to an ivory tower version of reality that bears no resemblance to the world as it really is." You can read that article in our newsletter in its entirety. Also, Michael Pinto said, "This new federal policy is extremely dangerous and virtually guarantees the U.S. economy will suffer a severe depression in the near future. Bernanke should start shrinking the balance sheet of the Fed and allow interest rates to normalize now. When the free market does it for him, it will be too late." Also, Dan Norsini, a well-known advocate for precious metals, a very good trader. He said, "We have our military bases extended all around the world, and the great costs we have in keeping those up. You could look at this and say, we look like Rome. We're just Rome roughly 2,000 years later. But at some point, what's going to happen to the dollar is the exact same thing that happened to the Roman denarius. Eventually, it's going to implode and fall down on itself based on the sheer amount of money that's being created by the Federal Reserve. At some point, it's going to happen. There's no way to avoid it." That according to Dan Norsini. Some of the quotes this week regarding precious metals and what happened. James Turk said, "I've not lost any of my bullishness on the outlook for metals. Once you understand how the gold cartel operates, accumulating physical gold and silver on these orchestrated price drops is much less nerve-wracking." Also, Jim Sinclair said, "We were discussing gold over dinner. It sure looks like the elitists are about to attempt the great train robbery in gold. All the rumors are crap. This is the biggest manipulative play in gold ever. The only good part is, as soon as the criminals have their positions filled, we are on our way to $3,500. And Jim Sinclair also had this to say. He said, "You cannot fix the problems of the Western economic system by breaking the telltale thermometer, which is the price of gold. There is not one professional who does not know that sales in extreme volatility at a time of low activity internationally have but one purpose, and that is to reduce the price of gold. Charts and technical analysts in such a manipulated, manufactured market are understood by you are useless. This is a move of desperation by the Federal Reserve via gold banks based on the false premise that attacking the symptoms without meaningful economic intervention is going to cure the problem. Gold is going to $3,500 and above. The U.S. dollar is headed to 72 cents and lower. We are once again giving away greatness by driving gold into the coffers of Asia in a bargain process that a powerful academic bureaucrat has selected. It is just that simple. Nobody said survival from the onslaught of the demons would be easy, but it will be successful. It sure looks like the elitists are about to attempt the great train robbery in gold. All the rumors are crap. As I said off the top, this is the biggest manipulative play in gold ever, and he believes that once certain forces have their positions filled, we're off to $3,500. Jim Rogers says, if gold goes down, I hope I'm smart enough to buy more. If it goes down a lot, I'm hoping I'm smart enough to buy even more. So, Harold, you know, we have about 2 minutes left here in our first segment. Whether you're a part of the camp that believes it's manipulated down, or if it was due to hedge funds squaring books at the end of the year, or a good GDP number at the end of the year out of the blue, really, if you have a long-term view and you share our thesis, and there are a lot of different opinions in 2013. It was funny, Larry Berman on Berman's Call on BNN, his Monday show, said he's never heard or seen so many different opinions for 2013. And it's really crazy, because that's what makes a market, as Harold was saying. Some people are buying this, other people are buying that. Some think it's going to go down, some think it's going to go up. But the bottom line is, from our point of view, it's all based on monetary policy. If you look at it, the United States and $1 trillion they're printing out of thin air. Harold, with about a minute, it's positive for hard assets.
Well, it has to be, Randy, because, again, we know what will happen when you print that much money. The value of the dollar has got to drop tremendously. And as the dollar falls, especially through different support levels, is when gold will really start to take off. So there's no doubt in my mind, that's what I said at the beginning. I'm not selling any of my physical gold or any of my physical silver, primarily because it would make absolutely no sense to do so. I don't get frustrated at all over these type of market moves because, again, I've traded these markets for 35 years. I've seen basically everything happen in this market. And, again, what's happening at this point does not concern me. So, again, I'm sticking with my same positions. I'm not selling anything. And, again, I think next year is going to be a tremendous year, especially as the U.S. dollar falls heavily.
The company Harold recommends you use is Worldwide Precious Metals, a Canadian company in business over 10 years. Connect with them, wwpmc.com, telephone number 1-866-623-2002. Get our free weekly newsletter via email, free of charge every week from them. Keep yourself up to date and start your own precious metals investment account today. The World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show at 9 a.m. Mountain Time. And we want to say Merry Christmas, Happy New Year's, Happy Holidays to everyone. Thank you for listening to our radio show. We will be on the air next week. We will be taping a show on Friday and have a newsletter for you as well, keeping you up to date on the markets. If you didn't hear it off the top of the show, breaking news. We are going back on the air in Toronto on a new station, News Talk 1010, CFRB, January 5th, a legendary radio station. We're going to be on Saturday at 6 p.m., so we're excited about that for 2013. Also, we continue on 630 CHED in Edmonton, QR77 in Calgary. Don't forget, you can listen to us on the radio, online at Herald's websites, HESradio.com, rarecoloreddiamonds.com, and then on demand, really, anytime you want, at your convenience, through iTunes. We have our podcast, and you can put it on you can listen to it through your iPad. I was listening to our show on my mom's iPad, and you can listen to it on your iPhone as well, your computer. You can get our free weekly newsletter. You can read that via a Word file on your computer or go through it on a tablet or a smartphone. We have all the bases covered to connect with you. And the company Herald recommends you use when it comes to investing in precious metals. Start your own precious metals investment account. Let them educate you all the reasons why you need hard assets. That is Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Their website is www.pmc.com. Herald's website for diamonds is rarecoloreddiamonds.com, and it was a fantastic week for diamonds. It was a great year for diamonds. We'll talk about it here. First, though, we want to mention our featured diamond of the week. You can go to rarecoloreddiamonds.com and click on the featured diamond and see this week's diamond. It is 0.58 carat emerald cut, fancy intense purplish pink Argyle diamond. The Argyle mine is winding down in the next few years. Now's the time to invest in an Argyle pink, because when those diamonds are gone, they are gone. There goes 90 to 95% of the world's pink diamonds, and they will be very, very scarce. One of the articles we have, and it is a must-read, when you get a chance during the holidays or after the holidays, please get this report from Herald. Bain & Company has done an article, and it's called The Global Diamond Industry, A Portrait of Growth, and it's outstanding, this report. They go on to say that there's going to be strong demand, as we've talked about in the past, in Asia with China and India, and they have lots of great charts and tons of good info. If you want to know what the future holds for diamonds, read this report. Take the time. It is so well done. I highly encourage you to do that. As well, in our newsletter, you can get this from Herald. Diamonds are Germans' best friend for Christmas. Read that story. 9 things collectors will go nuts for in 2013. One of the big stories, though, Kelly Clarkson, who's a singer. She won American Idol the first go-around. I think she's one of the best singers on the planet. She got engaged last Friday, and she was given a canary yellow diamond by Brandon Blackstock. And Brandon Blackstock is he's the stepson of country superstar Reba McEntire. And Reba McEntire and her husband, Narvel Blackstock, managed Kelly Clarkson, and Kelly got to know Brandon, and suddenly, 9 months later, she has a beautiful canary yellow diamond, and we have a picture of it in our newsletter. Also, a couple of stories. Harold, what a stunning, beautiful canary yellow diamond, a great engagement gift.
You better believe it. Just a gorgeous, gorgeous diamond. And I'm with you. I like Kelly Clarkson also. I think she's a great singer. But all in all, the yellow diamond market is on fire. There's been so many articles written this year on yellow diamonds, and previous to us bringing this to everybody's attention, nobody even knew about yellow diamonds. They thought that they were just very poor quality white diamonds. But the fact is that the yellow diamond market, certain yellow diamonds, are on fire right now, and they're hitting record prices at auctions, almost every single auction. So it's a very, very exciting time to be in the diamond market. But let me make things fairly clear, is that not all diamonds are investment quality diamonds. In fact, most of them aren't. So there are very few diamonds that have track records. What we specialize in is the type of diamonds that are not in the multi-million-dollar ranges, which are available, for all of our clients, and that gives you the potential to make the maximum return on your investment with the least amount of risk. So basically, what we bring to you are some of the rarest diamonds, but have potential to make gigantic price moves like they did back in 1979 and 80. So, for example, we carry every color of diamond. Red diamonds are the rarest of all diamonds. Very few of them exist. They're ridiculously expensive. They start at about $2 to $2.5 million a carat. For a carat, about the size of your baby fingernail. Now, how many people in the world can actually afford to go out and buy that? Not many. And those, even though I do own them, and we have some of the most beautiful red diamonds on our website, again, we tend to recommend diamonds that are much more reasonable in price, that have a track record, that gives our clients the opportunity, again, to make the maximum return with the least amount of risk. So the diamonds that we recommend, first of all, are yellow flawless diamonds. They have to be internally flawless, because if they have flaws, if they're VS1s or VS2s or VVS1s or VVS2s, basically they have no track record. They have to be internally flawless. Very few of those exist. So basically, you want to own the yellow flawless diamonds that come from South Africa and from South America. Those are the diamonds that are on our website, rarecoloreddiamonds.com. You want to shy away from the diamonds from India, even though they can be graded as good colors and internally flawless. They're very brittle, and they don't have that beautiful fire that the South African and South American yellows do, and those are the diamonds that you'll find on our website. Just so you know, a yellow flawless diamond will increase in price by around 25% a year, but they have to be the internally flawless diamonds. They go up by 25% a year, therefore they double every 4 years in price. Now, in today's markets, there's no way that you can make 25% on an investment without taking a huge risk. And the fact is that diamonds like these yellow flawlesses have been making these type of returns for decades now. Back in 1980, you could have bought a yellow flawless diamond for about $500. Now they're about $20,000. That's how much those diamonds have gone up over time. And the fact is, of the high-quality yellow flawless diamonds, there's maybe only 100 available for the entire world. You'll look on our website, rarecoloreddiamonds.com, go to the loose diamond section, you'll see the yellow diamonds, the canary yellows, the fancy yellows, the fancy intense, and the fancy vivids. Again, amazing diamonds to own. They've got phenomenal track records, and even though they go up by 25% a year, double every 4 years, during times of high inflation in 1979-80, those diamonds went up 500%. 500% in 2 years. You tell me any investment that can give you that type of return where you're not taking a gigantic risk. So we very highly recommend yellow flawless diamonds. They start at $15,000. They go up from there depending on the size and the color. We have diamonds that are over 2 carats. We have diamonds that are over 3 carats. By the way, to get a yellow flawless diamond that's over 2 carat, only one diamond in 15 million is over 2 carats. And believe me, very, very few of them will ever turn out to be yellow and flawless. And again, those diamonds tend to take on a life of their own. They go up substantially. I have a yellow flawless diamond. It's an internally flawless intense yellow diamond, and it's 30 carats. The diamond would retail for about $3 million, and a diamond like that we would sell in the $1.5 million range. We sell our diamonds at dealer prices, not at retail prices that the jewelers will charge. So again, we have diamonds starting at $15,000, and we have yellow diamonds going all the way up to over $3 million. The majority of our clients that buy diamonds invest under $100,000. The next diamonds that you want to look at are the Argyle pink diamonds. Randy brought them up at the beginning of the show. Argyle pink diamonds are a phenomenon. They come from Western Australia. The Argyle mine was the largest producing diamond mine in the world, producing 30 million carats of diamonds a year starting in 1985. Now, most of those 30 million carats are low-grade industrial white diamonds that they use to cut other diamonds with. So those are definitely not investment quality diamonds. The investment quality diamonds that come out of the Argyle mines are their pink diamonds. And it's a very, very small number. It's about 200 carats a year. It's enough to fill the palm of your hand, or it's enough to fill 3/4 of a champagne glass. That's how small the pink diamond market is. And that represents 95% of the pink diamonds, and they tend to come from one mine, which is the Argyle mine in Australia. The reason that we're bringing this up to you is that the Argyle mine is about to close down. They're going to close by 2018, which is only 5 years from now. Give it 2 years for these pink diamonds to run out, and you're talking about a diamond that will increase 8 to 10 times what today's prices are. Means that if you bought a $40,000 Argyle pink, it'll probably turn out to be a $300,000 to $400,000 diamond within the next 10 years. So my clients that buy these type of diamonds put them away for their future. Again, they put them away for retirement because, let's face it, the way that the markets are going, as volatile as they are, the chances of retiring by having your money sitting in the stock market or mutual funds, in my opinion, are slim to next to none. What you really need to own are these amazing Argyle pinks and put them away for your future. You put them away for the next 8 to 10 years, and again, a diamond that you can buy for $50,000 could turn out to be a $400,000 to $500,000 return. And the reason that we quote those type of numbers is primarily because we saw the same scenario happen with blue diamonds back in 2005 when they went from $200,000 a carat to $2 million a carat within 7 years of the mine closing down. So again, we're very, very excited about what's happening in the diamond market. They do the same thing that gold and silver do without the risk. They respond to inflation and currency devaluation better than any other asset because, again, they do not trade on exchanges, so they don't have the price movements that the precious metals and the oil and the stock markets have because, again, you don't have buyers and sellers in the market selling them based on their own opinion. Colored diamonds have never, ever dropped in price. And the reason for that is of supply and demand. There's a tremendous demand for these as asset class, but there's very few of them available. So again, it's almost like economics 101. When you have a huge demand and a very small supply, the prices always go up. And that's what's happening in the Argyle pink market. It's just a phenomenon. These Argyle pinks are the most beautiful diamonds you could ever imagine, and they'll literally take your breath away. The other diamonds that I'm going to recommend to you are not colored diamonds. In fact, they're colorless diamonds. They're called D-flawless whites, the rarest white diamonds in the world. And they're very, very, very difficult to get. Now, my partner, who's a fourth-generation miner and cutter, cuts 900 carats of these amazing diamonds per year, between 1 to 5 carats. They're tremendously in demand. They're amongst the best investment diamonds you could ever buy. And in 1979 and 80, these diamonds, again, responded to inflation better than gold and silver. But the best thing that I can say is that in 2008, when the stock markets around the world plummeted, these diamonds went up 50% in 1 year. In fact, the Dow Jones dropped by 50%, and these D-flawless whites went up 50%. They're negative correlated to the stock market, meaning that if you had $1 million stock portfolio and you had $1 million D-flawless white diamond, your white diamond would have gone up by $500,000 in 2008, and your stock portfolio would have dropped by $500,000. That's what I mean by negative correlated to the stock market. Now, something that's extremely important about these D-flawless is we cut 85% of the world's D-flawless diamonds. There's a fund, a diamond fund that just got started in Europe out of Luxembourg. I met with these people this week, and they will be buying pretty well all of our D-flawless whites because they need to supply these diamonds for their fund. Now, these D-flawless whites that we cut are the best that you can possibly get. They're considered 0.001% of the marketplace. And these diamonds just skyrocket in price with the right scenario. So what's going to happen now is that this fund out of Luxembourg is going to be buying the majority of these 900 carats of D-flawless whites. What I'm instructing my clients and listeners of our radio shows to do, before they purchase these diamonds, make certain that you own some of these D-flawless whites. Now, they're not for everybody because they're expensive. They start at about $50,000, $60,000, $70,000 and go up from there per carat. We've got them up to 22 carats. In fact, I sold a 22-carat D-flawless white last week for $8 million, and that was the largest D-flawless that we had at that particular time. That was round. We also have a 100-carat D-flawless emerald cut, which is considered one of the largest D-flawless whites in the world, and a diamond like that is in the $30 to $35 million range. Most of our clients that buy diamonds and invest in diamonds invest under $100,000, and you could definitely get into the deflawless white market for under $100,000. And as this fund buys up all of these deflawless whites, we anticipate that the prices of these diamonds will increase by 25 to 50% a year. So get them while you still can. We love these diamonds. They are so beautiful, and we have them right now from 1 to 5 carats because that's what that fund is going to buy. The banks in Europe are insisting that they purchase deflawless triple X white diamonds. When I say triple X, I'm saying excellent in every category, in cut, polish, and symmetry. Those are the hardest white diamonds to get. They go up in price more than any other white diamond, and you can make a tremendous return on those particular diamonds. So while we still have them, now is the time to get these diamonds. The deflawless white diamonds, the round brilliance between 1 and 5 carats is what this fund is going to be purchasing, and you should definitely get these diamonds prior to this fund buying out that market. The prices will go up tremendously. So again, Randy, this was a phenomenal year in the diamond market. I've never been more proud of a recommendation that we've made than what's happened in diamonds, and it will continue. The worse the economy gets around the world, with the sovereign debt situation in Europe, with the tremendous debt in the United States, with the weak currency markets and currency devaluation, and heavy inflation coming, rare colored diamonds and these deflawless whites will get you where you want to go. There's no risk to them. They never ever go down in price, but they can increase in value more than almost any other commodity. I very strongly recommend you invest in yellow flawless diamonds. They start at $15,000. Get into the Argyle pinks. They start at about $35,000 to $40,000, and these deflawless whites, where you can get involved above the $50,000 to $60,000 range. These are the most amazing diamonds that you could ever invest in.
And if you want a red or a blue or a green, you can talk to Harold too, but that's a whole other price category, an investment category. RareColoredDiamonds.com. RareColoredDiamonds.com. Connect with Harold, and his telephone number for those who would like to speak with him personally and privately about their financial situation and learn more about diamonds, 1-800-432-1022, 1-800-432-1022, and speak to him about our featured diamond of the week, a 0.58 carat emerald cut fancy intense purplish pink Argyle diamond. A must see. And get the newsletter from Harold. We would be happy to send it out to you free of charge. Connect with him at Rare Colored Diamonds or give him a call at the number mentioned, 1-800-432-1022. And read that story on Kelly Clarkson, also Bain & Company, their extensive report with must-see charts on the exciting future for the global demand of diamonds. And if you take a look at colored diamonds, they average about appreciation of about 10 to 15% a year since formal records were kept in the 70s. It's a concentrated storehouse of wealth. That's why people are moving into it. It's not a piece of paper or some exotic hedge fund. It's something that's tangible, you can hold in your hand. It's nature's art. It's better than cash, because obviously diamonds have been around for thousands of years, and you can hold a diamond that would be worth a price of a Rolls Royce, if not more, in the palm of your hand. Also, it's tangible, it's reusable, resaleable. Unlike a stock certificate, bond, or T-bill, this is an investment you can hold in your hand. And really, the 5 compelling reasons to invest: privacy, portability, estate planning, price stability, and long-term growth. And when you read that article, that report from Bain & Company, and see the charts, the portrait of growth for diamonds, Harold, on what's going to be happening in Asia with India and China, and people starting to get more interested in diamonds as an investment and for jewelry and for engagements, it's just a very exciting proposition.
It certainly is. It certainly is. And again, also the most beautiful asset in the world to own. Now, one thing about the diamond market is that in the past, it's always been a question of how do you sell these diamonds. And we've realized that I've been in business a long time. I've been in the investment business 35 years, and an investment is only a good investment if you can resell it. And that's why we built H. Siegel Fine Auctions. It's the only real-time live auction site that specifically sells rare diamonds. And we built this for our clients to be able to sell their diamonds down the road. Now, we've had many auctions last year and this year, and they've done tremendously well. This is something that I'm extremely proud of because it's the only one of its kind in the world. And I literally sell live every diamond that comes up on our website. So we built this for our clients to resell their diamonds. Obviously, at this point, there's very few people selling. This is the time to be buying, as the prices over the next 5 to 10 years will skyrocket in the diamond market. But again, we will be having auctions again starting at the end of January. In fact, we'll announce it at the beginning of the year, the exact date. You're going to be able to go on our website. You're going to be able to sign in and get a password. You're going to be able to attend an auction and either participate and bid on these amazing diamonds, or you can sit back and watch. We sell diamonds all over the world. In actual fact, when we started doing our auctions, all of a sudden we started getting a huge amount of clients from Europe. And we all know that the sovereign debt situation in Europe is so severe, and their currencies like the euro and the lira and all these currencies are under attack and could be devalued tremendously. Diamonds are the only asset that are portable, private, and can be sold in another currency. So we did so well in London, primarily because the British pound sterling is worth so much more than the U.S. dollar. So the clients in England that were buying our diamonds at auction were getting a 35% break because their currency is worth 35% more. So consequently, we can hold auctions in certain parts of the world, so our clients can not only get the maximum return on their diamond, but we can also make money on the currency also. So we can hold auctions in England, throughout Europe, in Asia, anywhere we want. We've got the wherewithal to do them live, and this is not streaming either. This is not anything like that. This is a new technology that we have, that we invested in very heavily, that makes our website do tremendously well. So again, we're the only company that has these type of diamonds. We put our money where our mouth is. I've actually put up tremendous amounts of money over this last year to really buy and invest heavily in Argyle pinks, D flawlesses, and these beautiful yellow flawless diamonds. So again, if you go to our website, rarecoloreddiamonds.com, rarecolored with a D, diamonds.com. Go to the loose diamond section, look at our yellow flawlesses, look at our Argyle pinks, and look at our D flawless whites. You're going to see what everybody is so excited about. These are the most beautiful diamonds you've ever seen, and we're the type of company that if our clients do well, we do well. If our clients don't do well, we don't. So we work off of a profit situation. If you invest in diamonds through my company, and when you go to sell this diamond, when you profit on that diamond, we get 10% of the profit only. So if you bought an Argyle pink diamond, for example, for $50,000, and we sold that diamond for $500,000 10 years down the road, we'd get 10% of the $450,000 profit, and you would get all the rest. And that's the way it should be. You do well for your clients. If they do well on your recommendations, you deserve to share in the profit. Consequently, if we recommend a diamond to you and you break even on it and nobody makes money, that's the way it should be also. We don't deserve to profit if our clients don't do well. But I can assure you that what's happening in the rare diamond market is unprecedented. We are heading to tremendous prices. There are more millionaires and billionaires in the world right now than any other time in history. So again, we can not only bring to you the most beautiful investment diamonds, the yellow flawlesses, the Argyle pinks, and the D flawless whites, but we're the only company that can resell them for you also. And again, I think that you're going to find dealing with my company to be a true joy because we have museum quality pieces that you'll never see anywhere else in the world.
Connect with Harold, rarecoloreddiamonds.com, telephone number 1-800-432-1022. On the precious metal side of things, only one company Harold recommends you use, that is Worldwide Precious Metals, a company in business the entire time this bull run has gone on. They will get you in the real physical metal, not paper promises. They'll explain all the ins and outs of this market, the hard asset market, gold, silver, platinum, palladium. WWPMC.com, telephone number 1-866-623-2002. With about 30 seconds left, Harold, happy holidays to all our listeners.
Thank you very much, Randy. Again, it's been a fabulous year. We still have another show coming, but I wish everybody a wonderful holiday, a very, very happy holiday. And again, we love doing the show, and we're looking forward to a fabulous 2013.
Merry Christmas to those that listen to us in Calgary on QR77, 630 CHED in Edmonton, also all around the world via our podcast on iTunes and from Herald's websites. The show is archived there as well, HES Radio and rarecoloreddiamonds.com. Merry Christmas, Happy New Year, Happy Holidays. If you're interested in investing in diamonds, rarecoloreddiamonds.com, 1-800-432-1022. Metals, precious metals, wwpmc.com or 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.